Welcome to FXtech's comprehensive USD CHF analysis for November 10 through 15, 2025. This week, we witnessed a dramatic price movement as the pair plunged from 0.8123 to 0.7877 before recovering. In this presentation, we'll analyze the sharp decline, examine critical technical levels, and provide actionable trading strategies for both short-term and medium-term horizons. We synthesize insights from 5 premier financial platforms: TradingView, Investing Live, Action Forex, Forex.com, and Daily Forex to deliver a comprehensive market perspective. Let's dive into the analysis prepared on November 17, 2025. Our analysis draws from 5 premier financial platforms to ensure comprehensive market coverage. TradingView provides real-time price data and technical indicators. Investing Live, formerly Forex Live, offers minute-by-minute market commentary. Action Forex delivers weekly technical outlooks with Elliott wave analysis. Forex.com contributes institutional-grade research combining fundamental and technical perspectives. Finally, Daily Forex provides daily technical forecasts with consistent analytical frameworks. By synthesizing information from these diverse sources, we create a well-rounded perspective on USD CHF market dynamics, ensuring our analysis captures both short-term price action and longer-term structural trends. USD/CHF currently trades at 0.79390 on November 14th. Up 0.13% on the day. The pair opened at 0.79270 and has traded in a range of 0.78782 to 0.79480. Volume reached 73,170 ticks, indicating active trading. Performance metrics reveal a challenging year, with the pair down 1.43% over 5 days, 0.35% over 1 month, and a significant 12.43% year-to-date decline. The all-time performance shows a 49.91% decline from historical highs. Technical indicators present a neutral stance, with both oscillators and moving averages showing neutral readings, suggesting a period of consolidation. The pair experienced a dramatic 246 pip decline from the recent high of 0.8123 to a weekly low of 0.7877. Representing a 2.46% drop. However, the market recovered ahead of critical support at 0.7872, suggesting strong buyer interest at this level. Action Forex identifies this movement as completing a 3-wave corrective structure, indicating the rebound from 0.7828 was corrective rather than a new bullish trend. The recovery to current levels represents a modest 117 pip bounce, but remains well below the recent high. Initial bias has turned neutral for the week as the market assesses its next directional move. Critical resistance levels include 0.7997, the 55-period 4-hour EMA, which represents immediate resistance. A sustained break would introduce uncertainty into the bearish outlook. The recent high of 0.8123 marks the completion of the 3-wave structure. The 200-day EMA at 0.82 is a widely watched long-term trend indicator, while 0.8332, the 2023 low, represents critical long-term resistance. On the support side, 0.7872 is the most critical near-term level. Breaking below would pave the way to resume the larger downtrend toward 0.7828, 0.7599, 0.7382, and ultimately the 2011 low at 0.7065. Action Forex reports that USD CHF's sharp fall from 0.8123 accelerated to 0.7877 before recovering ahead of critical 0.7872 support. Initial bias has turned neutral for the week. The corrective rebound from 0.7828 appears to have completed, with a 3-wave structure at 0.8123, indicating corrective rather than impulsive movement. Key pivot levels include 0.7872 support, a break below would resume the larger downtrend, and 0.7997 resistance, where a sustained break would mix up the outlook. Fibonacci projections target 0.7599 as the near-term goal and 0.7382 as the medium-term objective. The long-term downtrend from 1.0342 remains in progress. For short-term traders with a 1 to 2 week horizon, the outlook is neutral with a bearish bias. The bearish setup involves waiting for a confirmed break below 0.7872 support, or selling rallies towards 0.7950-0.7997. Targets include 0.7828, 0.7750, and 0.7599, offering risk-reward ratios from 1.5 to 1 to 3.6 to 1. For medium-term traders looking 1 to 3 months ahead, the bearish scenario carries 60% probability, targeting 0.7599 and 0.7382. Build short positions on rallies towards 0.7950-0.8050 using a scaling-in approach. Use trailing stops and monitor U.S. data, Fed policy, SNB statements, and global risk sentiment. Short-term, we expect USD CHF to trade between 0.7800 and 0.8050 over the next 1 to 2 weeks, with a central tendency of 0.7900 to 0.7950. Probability scenarios favor bearish at 55%, neutral at 30%, and bullish at 15%. Key catalysts include US CPI and retail sales data, Fed speakers' commentary, and technical breaks of 0.7872 or 0.7997. Medium term, the expected range is 0.7350 to 0.8200 over 1 to 3 months, with a central tendency of 0.7600 to 0.7900. Bearish probability increases to 60%, with neutral at 25% and bullish at 15%. Strategic positioning favors building short positions on rallies. Upside risks include potential SNB intervention to prevent excessive CHF strength, strong U.S. economic data strengthening the dollar, improved global risk appetite reducing safe haven demand, and hawkish Fed policy. Downside risks encompass escalating geopolitical tensions boosting CHF safe haven demand, weak U.S. data accelerating decline, technical breakdown below 0.7872 triggering momentum selling, and persistent CHF appreciation. In conclusion, USD CHF remains in a bearish medium-term trend. The critical 0.7872 support represents the key battleground. Favor short positions on rallies towards 0.7950-0.8050, with targets at 0.7599 and 0.7382. Monitor SNB intervention signals and U.S. economic data releases closely.